going on, guys? How are you? How are you doing? So today I want to show you this technical analysis technique that you have been missing in your trading. First of all, guys, I want you to know that when you are trading, it doesn't matter what you know in terms of technical analysis, in terms of price action, in terms of anything that you might think of, right? In terms of order blocks, in terms of anything, right? Smart money, whatever. So it doesn't matter for you to know all the terms of smart money concept, or the terms of order blocks, institutional trading, technical analysis, and you are not seeing any progress in your trading. So today I just want you to listen carefully and understand how you can benefit from the information that you have from the technical analysis jargon that you crammed and things like that, right? So you have to know that at any given point, any given chart, we can project a sugar chart here, a coffee chart here. I can tell you 3 reasons to buy and 3 reasons to sell at any given price, at any given point. Why? Because if you look at technical analysis, there are some tools that can tell you to buy, while some are telling you to sell. Same with order blocks. You can buy, you can sell at any given point, at any given price chart. So what you need to do is to you have a system, you have a strategy, you have rules to trade, so that you can be consistent in your technical analysis and be consistent in your analysis. It doesn't matter if you are the best analyst ever and you're not making money. So today I want to show you the best strategy that you can devise from the tools that you have, from the tools that you have gathered from technical analysis up to smart money concepts, so that you can't be jumping from one strategy to another. So let's just put that to test. Let's say we are at this particular point, right? We are at this particular point. If you can clearly see here what we are trying to do here, we are here, right? Let's just draw a line here. Right, this line, if you look at this line, at this particular point, this is what a break of structure, and you can buy here. But if you look here, you can buy, some can buy what the retest, and some will be waiting for the what, for the breakout. So at this particular point, we have 2 trades. One wants to buy the bounce, right? One wants to what, to get in and what, and do the what. One wants to buy here the bounce. I can sell the what, the break of what, the break of this what, this resistance or support, whatever you want to call it. So what we want to do today is to maybe standardize how you can create a very profitable strategy that you can use, so that you can be caught up in jumping from strategy to strategy. So I will show you first on a drawing like this, then we'll go to the real charts and test proof this strategy that you can use in day trading, that you can use as a beginner. Right, guys, right, traders. So what we want to see here is and depending on what technical analysis method you use, you are familiar with this pattern, right? This is a market structure, simple market structure, technical, that you can see every day on your charts, on YouTube, anyway, you clearly see this. So I want you to be focusing on trades that look like this, where you are going to either be trading the break of structure, the flip zone, or you are going to be trading the order block. So if you are going to be trading the flip zone, this is what a flip zone looks like. So what you are going to be doing is you are going to be waiting for your trades, where you are going to be waiting for your trades at this particular point, whenever price breaks this, right? Whenever price breaks your a high or a low. So this is what you are going to do. Then there are some guys who are going to be trading order blocks, and if you are going to be an order block guy like myself, you are going to be trading around here. So you are going to be trading around this point. So what you are going to be doing is you are going to be waiting for an aggressive move, price break, then a retest of an order block, price break, a retest of an order block, and I want you to be focusing on one time frame. If you're focusing on one time frame, it means you are going to be using limit orders. So you are just going to be identifying your order block, set your limits, and let it run. Set and forget. This is what you are going to be doing, and this is the strategy that you are going to be using. I don't care what you trade. You might be trading currencies, you might be trading synthetic indices, sugar, coffee, whatever. I want you to be following this schematic. If you come here on what this is Euro USD, you are going to see that you have this schematic in every pair, in every asset that you are going on to be trading. So if you come here, you do this. This is the schematic that I've just drawn for you on that a page down below, right? So what you're going to be doing here, you're going to be waiting for a break of a swing point, right? You're going to be waiting for this break, and you're going to be marking order blocks in this area, and you're going to be setting limits at those points, at those order blocks, and you're going to be trading whatever comes at that, right? So I'm going to be showing you trades that I entered using this method, and I'm going also to be showing you how you can project, not just looking at what has already happened, hindsight, right? So we're going to be looking at all that. So the best place to look at is EJ, USD, and Euro USD, right? The majors. You have to concentrate on the majors, right? So it doesn't matter. You are looking at fair value gaps, you are looking at order blocks, anything that you're looking at is going to be very beneficial in terms of coming up with a strategy. So from the strategies that I've just shown you guys, you can clearly see that if you took these two, you draw your basic market structure schematic, it will look like this, what you are seeing here. So it will look like this. After that, what you are going to do is you are going to wait for a break of a major low, and you mark up your order block or your fair value gap depending on what you prefer in terms of these trades, right? So this is a trade that I took on Monday, and it was a fair value gap. I waited for price to retrace back to this fair value gap, and look what happened. I set a limit here, and my stop loss was slightly above at the fair value gap, as you can see there, and I went for 1 in 3, and as you can see, we hit our TP. And as the day progressed, right, I marked this order block, and I was expecting price to retrace back to this zone and trade away like that. So what happened is price did not get to my order block. It's fine if price doesn't get your order blocks, it's very fine. What you're just going to do is you're just going to shift your focus to more trades and see how price will be moving as time goes on. So you mark this order block again, you wait for price to come back, it doesn't come back, and today what are we waiting for? We're waiting for price maybe to trade into this area and trade that. So this is how you can map up your strategy. So with every strategy, you have to have rules, right? So the rules that you're going to be using for this strategy are very simple, right? I'm going to list them here so that you guys can clearly see. Right, guys, so these are the rules that we're going to be using. So you choose a time frame of your choice, right? And I prefer the H1. Why? Because it is more balanced compared to other time frames. It is not it doesn't take much time, and it doesn't take a very little time. So what I'm going to do, number one, we identify market structure. So market structure identification is what we have been doing, right? When we were marking this schematic with this line 2, right? Then number 2, you identify the direction that you want to take. So here you are identifying what you call order flow. Then you identify the order blocks that are in that direction, right? So for example, if you have identified to go down, you have to choose order blocks that are going the direction that you want to choose. For example, in this example, we identified that our trend was down, and we were choosing only bearish order blocks for our consideration, right? So this is what we have done, and we identified the order blocks. We have identified the order blocks in the direction that we want to go, then set the limits on the order block. So with this example, I want you to listen carefully. So what we do is, remember, you have something like this, right? What you are going to be doing here is you're going to be setting limits, right? So what you are going to do is you're going to take these two, right, and you map up your stop loss. You go for 1 in 3, right, or 1 in 2, depending on what you're doing. So here we've gone for 1 in 2.8, right? So what you're going to do is you set your buy limit at this point, at the beginning of that order block, and your stop loss is going down below at that order block, your TP is going where your risk to reward ratio is going to be, right? So you're going to set this as your limit. So remember, guys, if you are using limits, you need a broker that's trustworthy, a broker that's going to fill you at the price that you have chosen. And guys, remember, we are working with Megan Marcus, the best broker in the land. And if you want to use this strategy, to use limits, and to have a broker that you can trust that your limits are going to be filled at the particular point that you want, you have to register with Megan Marcus. The links are in the description down below. And guys, don't forget to hit me up when you have registered so that we can trade together. I can give you pointers of where to set your limits every morning, every day, and we can trade this as professionals. So let's go ahead and let's go ahead and finish up our rules. So rule number 5, we are going to be waiting for your trades. So at the end of the day, if your trade is not triggered, you delete the order and wait again for more analysis in the morning and see how you can do. So you repeat this process, you're going to see success in your trading. So this, guys, this is what we are going to be doing. So what we are going to be doing now is you're going to be looking at real life examples, at real life charts, and see how we can benefit from looking at charts and seeing some examples so you guys can clearly see what we are talking about. And if you are not yet part of our Telegram chat, you have to join. In the description down below are all the links that you need to any services that you need. So make sure you join our Telegram chat so that we can go together and learn as we go, as a group, as a family. So look at this. Number 1, what are we looking at? We're looking at market structure. So market structure has changed at this particular point when this high was taken out by this aggressive move. Then you see price moving down like this. This is how price is moving, right? So number 1, we have identified our market structure. Number 2, we have to identify our order flow. Order flow, remember, order flow, you are going to identify order flow by looking at the direction of your aggressive moves. Where your aggressive moves are going, that's your order flow, right? So from this, you are going to see that your order flow is what? Is up, and your order flow is bullish. So you are going, remember, that we have identified our order flow as bullish. So the next step is to identify the order blocks that satisfy that notion. So what you're going to be doing here is, let's just delete everything so you guys can clearly see what we are doing. So you are now identifying the order blocks that are that make sense, the order blocks that are very, very, very high probability to be retested. So what you are going to be doing is, so I mark this order block so that I can tell you, or so that you guys can see that this is not a very good order block. Why? Because it was formed and it was retested, so it's not fresh. So from here, the order block that I would consider for my limits is this order block that you see down here. So I would consider this order block as my order block of choice, and I would set my limits at this particular point and wait for what? And wait for price to retest that like this. So I would wait for price to come back here and move away. So if it does come back down here, my limits will be filled and I will go up like that. So this is what I will be doing. So this is GBP USD. We are going again. Let's look at USD JPY. Okay, before we go there, let's look at GBP JPY, and I'll show you a trade that I took yesterday with this strategy, right? So if you go to our Telegram chat, you see that we sent this before it happened, right? So we marked this order block. Why? Because we had identified the order flow and we had identified our market structure. So from what you are seeing here, you can clearly see that our market structure was what? Was going down, and our market structure was bearish, right? So this is what the market structure looks like, right? So what we are just going to do here is we are going to be looking at this particular trade at this point and see how we mapped out that trade. So let's just remove all the drawings and see how we got this. So number 1, we had taken out this low, right? We had taken out this low, a break of what? A break of structure. So what followed was this order block that you see here. So this was the order block that we chosen, and we set our limits at this particular point, and we caught that pin. And guess what? We also went for what? We also went for 1 in 3, and our TP was hit. Let's just replay it so that you guys can clearly see what happened with this trade. So this is what we had. So 3 in 1, our TP was hit there, and this was how our trade panned out. So this is what you guys can clearly see. So you can clearly see that this order block was in a fair value gap at this particular point. So this was a fair value gap. So if you're a fair value gap trader, you could have caught this move again. Remember, any strategy that you choose to make rules on, you will be consistent as long as you are technically consistent on what you are doing. If you are consistent with the strategy that you are using, you will see results in your trade. So you are technically consistent and you risk consistently the percentages that you have determined in time, right? You are going to see what? You're going to see results. So without saying much, let's just go to AUD JPY. So this is this is Aussie yen, right? So from Aussie yen, you can clearly see that we had a very beautiful price action market structure going down, right? If you can clearly see, we had that, and this is a trend that we mapped out again. Order block and price tapped into that and went down like what you are seeing here. And here again, we had this order block and price tapped in again and went down, and we had this order block again, price tapped and went down. So what we are waiting for here is the retest of this order block, and we have set our limits at this particular point. What you are waiting for is very simple. We're just waiting for price to hit this OB and go down like that. This is the move that we're waiting for, or the play that we want to see Aussie yen doing. And we can also look at another example, right? Let's go to DXY, the dollar index, right? So from the dollar index, you can clearly see that we are in a bearish trend, and what we are just going to do is we are just marking order blocks that satisfy that notion of order blocks that are bearish, so that we can go down and make money as we go. And if you look down here where price action was, when price action was bullish, you can clearly see that price was respecting the bullish order blocks, and had you set limits on that, you would have made a lot of money. So let me just show you another trade that we did mark yesterday but didn't work quite as we expected, right? So this was the order block that we wanted price to come, but price just pierced through the order block and our stop loss was hit at this particular point. So if you look closely here, you can clearly see that we have a trade in motion and price is currently retesting this order block. So we are not going to trade this order block. Why? Because we did not map it out. We want trades that would have mapped out prior to price reaching that order block, so that we can keep our psychology in check and we can be disciplined as we trade these markets. So guys, this is what you can do. And if you are someone who trades with entries on the 15-minute, on the 5-minute time frame, you can clearly see that price has traded into your order block on the 5-minute time frame here, and you can click sell here and your stop loss goes above here. So what you can just do, for those guys that know what they are doing, your stop loss is going above there and you are going for this one, for this low maybe, and you are going for 3 for 1 in 3, and you could easily make 3% of your money here if you risk 1%. Guys, this is what I had for you. I hope it was helpful, and I hope to see you in the next video that is going to drop after this. Trade what you see. And if you have registered with my recommended broker, Mugen Markets, let me know in the comment section below, and hit me up on Telegram so that we can add you to the group and we trade as a family, as a group. Trade what you see. My name is Shocks. Out, hands to the head. Salute.